Hello everyone and welcome to today's webinar all about paternity pay in Sage 50 Payroll. My name's Duncan, I'm your host and presenter, and I am joined this morning by my colleagues Laura and Ollie, who'll be standing by in the background ready to answer any questions. So we're going to begin with a brief introduction to statutory paternity pay legislation, and we'll tell you what the current statutory rates of pay are. We're then going to do some demonstrations. So we're going to show you how to record paternity details in Sage 50 Payroll. There's a couple of different ways that you can do this. We're then going to look at adjusting your employees' payments, either using the Make Up Basic option or by doing manual adjustments to reduce the basic pay. And then we'll show you the process for reclaiming statutory parental payments and how to submit an EPS to report the amount reclaimed. Also have some troubleshooting tips around common SPP issues, and we'll cover off those final questions as we get to the end of the webinar. So let's get things started with an introduction to statutory paternity pay, or SPP for short. So this is a payment made by employers to eligible employees if they and their partner are having a baby, adopting a child, or having a baby through a surrogacy arrangement. Now, currently, an employee would be entitled to either 1 or 2 weeks of SPP at the following standard rate. So it's £172.48 per week for the current tax year, or 90% of average weekly earnings if that is lower. So that's 1 or 2 weeks, which are full weeks of pay and need to be taken as a continuous block. Now, to be eligible for the payment, the employee must meet some conditions. These are outlined on the gov.uk website, but to summarise, employees must be employed by you up to the date the child is born or placed with an adopter. They need to be on your payroll, earning at least £123 a week in the 8-week relevant period. So that's the 8 weeks leading up to the qualifying week. They need to give you the correct notice that they're going to take the leave and when that's going to start. They need to be taking time off to look after the child or their partner, be responsible for the child's upbringing, and have been continuously employed by you for at least 26 weeks up to any day in the qualifying week. So this qualifying week is based around the due date. It's 15 weeks before the due date, and we're going to take a look at some of the key dates on a timeline just to put that all into a nice visual for you. So in terms of key dates, everything counts back from the due date, also known as expected week of confinement, or EWC. If you count back 15 weeks, that takes you to the qualifying week. And in order to qualify for the statutory paternity pay, an employee's start date must be at least 26 weeks before that qualifying week. So in effect, that's a total of 41 weeks up to the due date. There's an 8-week set period leading up to the qualifying week where average weekly earnings are calculated. So they need to be £123 or more for the employee to qualify. The earliest date that paternity pay can be paid is the date the baby is born. And currently, the leave must finish within 56 days of the baby's birth. Now, the reason I say currently is the government are working on plans to improve statutory paternity pay, which are due to come into force from April of next year. The main change is they're going to allow the partner to take either 1 or 2 weeks in blocks. So it doesn't have to be a continuous period of leave. It could be 1 week at one point, another week at another point. And they're going to make it more flexible by allowing that paternity pay to be taken within the first year of the baby's birth. But currently, for the current tax year, earliest it can start is the date the baby is born, and the leave must finish within 56 days of the birth. And we'll tell you more about any changes to legislation closer to the time if you come along to our payroll year-end webinars. Now, before we go on to the demonstrations, I just want to make clear that you can reclaim any statutory parental payment. So most employers can reclaim 92% of the statutory payment paid. However, if you qualify for what's known as small employers relief, you get 100% of the statutory payment and a further 3% of NI compensation, which is a total reclaim of 103%. You'd usually qualify for the small employers relief if your total national insurance contributions, that's employer plus employee, are £45,000 or less in the tax year before the qualifying or matching week. So it's something that you should check at the start of each tax year and before you process any statutory payment, as if you are eligible to claim the small employers relief, getting that 103% instead of 92%, you will need to set this up in your company settings before you process the payment. So if you came to last week's webinar on maternity pay, it's the exact same arrangement for maternity, adoption, shared parental, or parental bereavement pay. So we'll just remind you of where that setting is and how you can check your Class 1 national insurance contributions for a previous tax year. So just bringing the slides down for a moment. First thing I will do is show you how you can check last year's total national insurance contribution. So to run a report for a previous tax year, the first thing you do is change your process date to the 5th of April of that previous year. So in my case, I'm going to check for 2022 to 23 by setting the date to the 5th of April 2023. And once you've done that, you can go into the usual reports option. If you go to your period end folder and find Form P32, Employer Payment Record, and instead of just running it for a single month, which is what you would usually do in the current year, we're going to run it for the full year, so month 1 to 12, which is what I've entered here in the criteria values. And then you can see this report is for 2022 to 23. And it shows me here that my gross national insurance, that's the figure in box 4, is just over 37,000, which means I would qualify for small employers relief in the new tax year. So that's established that I qualify. If I just set my process date back to my next pay date, which will be the 30th of November, what I can then do is I can check my company settings. So just go to the company tasks here at the bottom and then settings. And then there's a tick box that you can tick if you're eligible for small employers relief like I am, or if you are not eligible and you're just reclaiming the standard 92%, you can come into your company settings and you can make sure that that box is not ticked. So to save any changes, I would click OK, and you'll see at the end of the demo when we come to reclaim the parental pay, you'll see that I'm reclaiming the small employers percentage. So that's all I'm going to cover on the legislation side of things. What we will move on to next is recording paternity details. And I want to show you a couple of ways you can do this in your program and a handy report that you can run, which summarizes these details. But before you can record them, there's a bit of information you will need. And that is, number one, the date your employee wants to start their paternity leave. So the date that the statutory paternity pay will begin. And you'll need a declaration from your employee confirming the baby's due date. And for this, you can either use your own form if you've created one, or if you do a search online for SC3, you can use HMRC's form, which you can download from the gov.uk website. You'll also need to know the date that the baby was born, as this will be the earliest date that SPP can begin. So if you don't know that when you come into setup, you can enter the rest of the details, but to actually pay it, you will need to enter the date the baby was born. So let's take a look at how to record the paternity details. If I just bring the slides down once again. And I'm going to show you two different ways, and we're going to start with the quick SPP option. Now to use this, you would first need to select the employee that's starting their paternity leave. So I've selected employee 2 in my list. And if you're on the payroll tasks, you'll see there's a links section, which you can resize if you need to. Sometimes it's hidden down here. and there is a link that you'll find for recording paternity. Now, if you've got a smaller screen and you can't see the links section, you'll also find this if you go to the employee tasks. As you can see here, we've got the option for recording paternity just here. So that opens up my quick SPP screen, and I can now enter the required details. So first of all, I'm ticking a box to confirm I've received the signed declaration from my employee. So I've got that SC3 form. And then from that declaration, they've told me the expected date of birth, the due date, which in this case was the 13th of November. And I can then click the box or click the button to check entitlement, and Payroll will run some checks in the background and it will establish whether those qualifying conditions have been met. So you'll see here I've got 3 ticks. I've received the evidence, the employee's worked for long enough, and their earnings are high enough. And then it starts to show further information such as what the average earnings are and then some of the key dates. Now, to actually pay this payment, we will need to fill in the rest of the details. So the last day of work will be the day before the SPP payments begin. And the latest date that this can be, the earliest date that this can be would be the date before the actual date of birth. Now, in this case, baby was a few days late arriving, and the employee actually worked up until Wednesday the 15th. The actual date of birth was that same day, it was the 15th. And then they're taking the full 2 weeks. So SPP will begin on the 16th. They're going to take 2 weeks. So if I count forward 2 weeks from the 16th, they will be due to return to work on the 30th of November. So I've got all the information required entered. You can see that the key dates are listed here. The average earnings have been calculated automatically. So if you want to check how it was calculated, you can click earnings during set period. And you can see in this case, 2 monthly payments have been used in the calculation to give me a weekly average figure. And because that's above £123, the employee does indeed qualify. And the earnings are so high, in fact, that they're just going to get the standard rate of £172.48. And you can see that in the entitlement section here at the bottom. So 2 weeks is going to be paid at £172.48 per week, and that's the rate for the current tax year. Now, if you want, you can print a summary of this information by clicking the print option here at the bottom, and that'll generate a report that looks something like this. So these are the SPP details for this particular employee, just showing that qualifying conditions were met, what the calculated average earnings are, and then a series of key dates, including the due date, the qualifying week, 15th week before the baby's due, latest start date to qualify, a set period, and the latest date leave can start to get that entitlement in within that 56-day period. So you might find that useful for your records. You could even provide a copy to your employee should they want that. So everything's now entered. I'm just going to save the paternity details and click on to close. And everything is now set up. And if I just move forward to my pay run, I've already set my pay date. It's going to be the 30th of November. I can go into the enter payment screen. And if I click the summary tab, so summary up here, this is where we see the statutory paternity pay. So if you want to see how that's been broken down, so 344.96, you can always highlight it, click the drop down arrow, choose the SPP type. So the A is what you would use for adopted children, SPP, if it's the birth parent or partner of the birth parent, I should say. And then if we click the entitlement tab here, you can see it confirms the start date and the entitlement currently due. So there are 2 weeks between that date and my pay date, the 30th of November, and that's how it gets to that amount. So Quick SPP gives you that convenient way of entering everything in one place, producing the required report, and then you can go into enter payments to check the amount that is being calculated for the current period. Now, the other way you could enter that information is by entering it directly in the employee record. So I'll quickly show you where it goes. So if I open the employee record here on the list and click on the absence tab at the top of the screen, under further information, there's a section for SPP. And from there, you could enter the baby arrival dates here, the due date, the born on date, and the ended work and return to work dates. You'd need to click the auto calc button just to populate the average weekly gross pay. And then here on the entitlement tab, as we saw before, this is the full entitlement and what is currently due. So alternative to quick SPP is by entering the information directly in the employee record. So let's just recap the recording paternity details. So that's the information you need: start of paternity leave, declaration, date the baby was born. We use the quick SPP option to enter the relevant details. So you'll find this information on the declaration that the employee has filled in. And then moving ahead to the pay run, just to check the statutory paternity pay amount, that is found on the summary tab. And to get the drill down, you can click the drop down arrow, choose the SPP type, and then select the entitlement tab. So that deals with the statutory payment. What we're going to take a look at next is adjusting other payments. So for the period that the employee is on leave, you'll need to make an adjustment to the basic. And the way that you do this will depend on whether or not you have a company paternity scheme in place, where you're making up to the employee's usual pay, or whether you don't have a company scheme and you only want to pay them statutory pay for the period that they're off. So in this next demo, I'm going to show you two different ways of adjusting employees' payments. The first is making up to basic, and that's ideal if you have a company scheme. And the second is by doing a manual adjustment, and that is a process similar to what you would do for employees that have maybe left in the middle of a period, or they've started work in the middle of a period and you don't want to pay them for a full week or month. So let's just bring the slides down again and continue this demo. So we're now on the payroll tasks. I've got the same employee selected. If I go back into the enter payment screen, you'll see currently I've got this employee's full salary entered, so £2,000. And when I click onto the summary tab, the statutory paternity pay is being paid on top. So let's imagine that for this employee, we have a company paternity scheme, and we want them to receive their usual full basic pay for this period. And to make an adjustment automatically to the employee's basic, I can use the make up basic option, which is found here on the summary tab. So first step is to make sure you've got the amount you want to pay them entered. So I've got the full salary entered on the payments tab. And then if you go to the summary tab, you can then click make up basic. It'll confirm that you've selected to make up basic for the statutory payment, and it will suggest what payment needs to be adjusted. In this case, it's picked out salary. So because salary is the payment I want to adjust, I'm going to click yes to continue. And you will see there that the pre-tax payments has reduced. It's now being added to the statutory paternity pay, and our total gross pay is now the usual £2,000. And it's done the adjustment by amending the hours or number value, which in turn reduces the amount of the basic salary. So that's one way to do it. If you don't have a company scheme and you only want to pay them statutory pay for the period they're off, what you would need to do is a manual calculation to work out exactly how much salary you want to give them for this period based on the days or maybe the hours that they've worked. And then you can enter that as their payment, which will then be added to the statutory paternity pay. Now, there are different ways that you can work this out, different ways that you can adjust the pay. You might base it on an employee's daily rate of pay. Could be on an hourly rate if you know the exact number of hours you want to pay them, or you might make an adjustment based on the days in that particular period that they happen to have worked. So the way I'm going to do it in this example is I'm going to pay the employee for the 12 days that they worked in November out of a total of 22 working days in that month. So I'm going to adjust the hours or number value, and you can bring up a calculator by clicking on this small icon here. I'm just going to do 12 divided by 22. I'm going to tab across. And then this is the amount that I've calculated that I want to pay them for working 12 days in November. Now, like I say, you might have a different method. So have a think about how you would deal with employees that have started working for you and they haven't worked the full period, or maybe a leaver that's left before the end of the period. And whatever calculation you would do in that scenario is how you would adjust the salary in this scenario when they're taking parental leave. So that amount, £1,091, is being added to the statutory paternity pay for the 2 weeks, and this is what they're getting in total for this month. Now, I just want to mention one other adjustment that you may need to make, and this all depends on the rules of your pension scheme, if the employee happens to be in a pension. So with some pension schemes, for employees who are on parental leave, you are required to continue contributing the usual amount as the employer contribution, rather than reducing that in line with reduced pay. And if that applies in your scenario, and we can't tell you whether it does or not, you'll need to check with your pension provider as to the rules of your scheme. You can override the calculated pension contribution by setting it to a fixed amount. So I'll quickly show you how you would do that. If you click the employee button, that takes you into the employee record, and go to the pensions tab. You can see usually for this employer, they're paying £44.40 per month. It's actually reduced this month because of the statutory pay. So if I want to maintain that at its usual amount, so I'll just go back there, you can click Manage Schemes, you can edit your pension scheme, and you can temporarily change any of the contributions to fixed amounts. So I'm just doing it with the employer contribution. And you can see there, if I click Save and check the employer's information, that has overridden the calculated percentage pension contribution. So just something to keep in mind if that's the way that your pension scheme works. And then from next month, when they're back on normal leave, we can put that back to the percentage. So whichever way you've chosen to make the adjustment, once you're happy with the payments, you would then continue with your pay run as usual. So I'll quickly show you some of the pre-update reports. So we'll take a look at a pay slip. Just running a standard pay slip here. Statutory payments always have their own line. So parental pay in this case, representing the 2 weeks that they're receiving this month. This is the adjusted salary. So I did a manual adjustment to reduce this down. And then we've got the usual tax, NI, and pension contributions, with that employer pension being the fixed amount that I typed in. So that's parental pay on a pay slip. You'll also see it shown in a separate column on the payment summary report. So there's a parental payments column, which will show you details of any parental payments paid to the employee. So I'm just going to go ahead and complete my pay run. I can complete it for everyone. I'm just going to update the records. And then you would send your full payment submission in the usual way. And this will simply submit their usual pay values and deductions such as tax and national insurance, but it doesn't account for any amounts that you're reclaiming. So this total liability sent with my FPS is actually more than what I'm going to end up paying at the end of the month because I'm doing a reclaim. And for that reason, I will need to do another submission at the end of the month known as an employer payment summary, or EPS. But for now, I've completed my pay run for that month, and that includes the adjustment we made to the pay. So a quick recap on that section. First way I showed you was using Makeup Basic. So this is ideal for a company scheme that pays a specified amount, for example, full basic. To use it, enter the full amount you want the employee to receive, and then from the summary tab, use the Makeup Basic option, and that will automatically reduce the selected payment by the amount of statutory pay. And the other way was adjusting the payments manually. So get your calculator out, work this out however you would normally work out a part period salary, and then enter that against the salary line. The other thing to consider is whether a pension adjustment is needed. So it's usually the employer pension contributions. If there is an adjustment needed, you can enter a fixed amount if required to override calculated percentages, but always check with your pension provider or HMRC if you require any clarification, and some information can be found on the link on the slide. So last thing to consider is how to reclaim the statutory payments. So as mentioned at the start, you'll get at least 92% of any statutory parental pay. And if you qualify for small employers relief, you get 103%. This is all calculated when you run the P32 report at the end of the tax month. And for SPP, you'll be checking boxes 8 and 9 where applicable. And because you're making a reclaim, you will need to do a further submission at the end of the tax month. So this one's a monthly submission, even if your payroll is weekly. So you'd wait until the end of the tax month to do an EPS, and that will report the amounts that you've recovered. So let's show you a demo on this one. So first of all, just checking that I've completed payroll for the full tax month. So my last updated and last FPS date column, they are both showing 30th of November. I'm going to go into my reports. I've actually added it to my favorites, the form P32, but it can be found within period end, this section here. We're going to run this for the current month only, which is tax month 8. So I've got 8 and 8 in the report criteria. And then if I just zoom in, give you a closer look, you can see that this month I have total SPP recovered, 344.96, and the NI compensation, 3% of that amount, gives me a total reclaim of 103%. Now that means when I come to make the payment, instead of that £5,000 that was submitted in my FPS, I'm paying a lower amount, so 4,784. And for that reason, I need to send an EPS to report the difference. So it is a bit early in the month for doing an EPS, so ordinarily you would wait until the end of the tax month. But just for this demo, we're going to do it now. So I'm going to go to the e-submissions tasks, and you'll see there's a task here for employer payment summary. And click on. We'll need to complete a short wizard to explain why we're sending this. So the reason we select is we're adjusting the payment because you can recover statutory payments. It will then confirm the tax month the submission relates to, which is tax month 8 for November. And it will show the tax year-to-date values. So the year-to-date values for the amounts recovered. And in this case, it's my first recovery of the year, and it relates to the statutory paternity pay. On the next step, you can manually enter CIS deduction suffered, if that applies to you. And you'll then see apprenticeship levy values if you are liable to pay that. So we then complete the wizard, which takes us into the submission. And that then submits the adjustment to HMRC so that it knows to expect a slightly lower payment to what was included on my FPS. So that submission was successful, and all that remains is for me to make my payment and at the same time recover that statutory pay. So those are your month-end tasks in relation to any statutory parental payment. So last thing we're going to cover in the webinar is just a little bit of troubleshooting. So we've put together some of the most common problems that people come against when they're processing or dealing with SPP. Some of these are similar to the maternity pay troubleshooting that you might have seen in last week's webinar. But one of the main reasons to run into an issue is because you're processing SPP for an employee that has had it before. And if you've entered the details directly in the employee record, you may not have reset the number of weeks paid in the year-to-date values. So I just want to show you how this scenario comes about and a couple of ways that you can solve it. So I'm just going to set my process date to the next pay date. It's going to be my December pay date. And I'm going to select an employee who's been on paternity leave before. If I go straight into the employee record and onto the absence tab and then SPP, I can actually see some historical dates. I know they've had it before. And if I click onto the entitlement tab, we have 2 weeks of previously paid SPP stored in the employee record. Now, this is what causes a problem, because if I simply replace these dates with dates for the baby that's currently due, so let's just pop some dates in, put an ended work date in, return to work date in, and recalculate the average pay. Got a few warnings there. Let's just check I've put the right dates in. Yeah, we've got them ending work too early on that. So obviously they can only start paternity leave once the baby is born. But the problem that you get is when you come to check the payment, it doesn't calculate any paternity pay. And when we try to drill down to see what's causing that, it says there's 2 weeks due, but it also says that 2 weeks has been previously paid. So the reason for that is within the year-to-date values, which I'll quickly show you. So from the employment tab, we've got year-to-date values, statutory payments. We've still got 2 weeks stored from the last time they were off. So you could manually reset that to 0 from here, and that would get you around the problem. Or if you record the paternity details this way, it will detect if there are already details entered. And if I click onto yes, it will completely clear the old information, including that year-to-date value. And then I can put the same dates in. And then if I save the details, and go back into enter payments, you can see that it does now calculate. So it's because of that year-to-date value, which you can either reset manually, or you can respond to the prompt and clear down the previous information. Just be careful about clearing down information, because if you just want to view the current paternity details, you would need to click no to view them. So for this employee that's recently received it, I just want to view, so I can click no. But if they've got another baby on the way this soon, not quite sure how, you would click yes to reset it. So useful one to know there. Other reasons for no SPP calculating are if average earnings are too low. So check your average earnings, they need to be 123 or above to qualify. Or if you have manual statutory pay calculations selected, just a tick box in the employee record. So you'll be notified about that if you use the quick SPP option, or you can clear it manually within the employee record. Other one just to quickly mention is sometimes you might find that only 1 week of SPP is being calculated, and that when you're expecting 2. And usually, more often than not, this is because there are less than 14 days between the start of paternity pay period and the return to work date. So if you have a look at the dates on the screenshot here, you can see we've got last day of work the 1st of July, return to work the 15th of July. So it seems like there should be 14 days between those dates. However, both of those days are working days. So the way that this is recorded, you've got the 2nd of July up to the 14th of July, which is only 13 days of leave. And that is why only 1 week is being calculated. So in that scenario, and I've recreated that actually for one of my employees here. So I've got 1st of December to 15th of December. I've only got 1 week calculated. And the reason for that is actually the last day of work was the day before. So the period of leave is the 1st to the 14th now. So we now have 2 weeks calculated. So check your last day of work and return to work date. Make sure that's definitely covering a 2 week period if you need to pay 2 weeks. So that actually brings us to the end of the presentation. It does give us 5 minutes to check through any of the unanswered questions. Just while we have a look through those, I want to mention some of the further support that you have access to. So you can get onto our help center from any browser by going to sage.co.uk/help and following the links to Sage 50 Payroll. You can also access our help articles from within Sage 50 Payroll by clicking on any help icon or question mark icon that you see, and that should bring up context-sensitive help based on the area you are currently looking at. So search the knowledge base, read our support guides. If you're interested in attending other webinars, our Help Centre has a link right at the top for webinars where you can see what's coming up, and you can also access recent recordings. You can also create a profile for Sage University by going to sageu.com. And from here, you can get stuck into our free e-learning courses, online certification, and bite-sized learning. So a great learning resource, all included as a Sage member. You can access that at sageu.com by creating your profile. So the rest of the webinar will be given over to questions. We're going to check the Q&A now, continue answering either in that question section, or if there's any common questions, I might come back on and cover those off. So if you don't have questions and you're leaving now, thank you very much for joining us at the webinar today. Do look out for a follow-up email arriving later today. It contains a link to the recording, as well as a link to our survey and to register for future webinars. Or if you see a survey as you exit the webinar, I really appreciate any feedback that you might have, as it helps us to improve these sessions moving forward. So I'm going to go on to mute just briefly as we cover off those final questions, and I will be back with you shortly. Hello again, everyone, and thank you for submitting your questions. I think we've provided an answer to most of them. One that I will just quickly mention is a few of you were asking about paying weekly paid employees in arrears and whether there was a way to pay each week's SPP separately. There's kind of a workaround for that if you wanted to do it. The way that the system works is it will always calculate SPP up to your process date, which if you're paying in arrears is often the week after the week you'd normally pay them up to. So one thing you could do if you wanted to pay 1 week at a time is you can kind of change the return to work date so it's slightly earlier when you process the first week, so that only 1 week's entitlement is being calculated. And then once you've completely finished that pay run and you're on to the next week, you can set the return to work date to the correct return to work date a week later, and then it will pick up the second week. So it's not the way the program's designed. It's designed to calculate up to the pay date, but using the return to work date is one way. You could sort of cap it at 1 week when you're doing the first week. So just put the return to work date a week before what it is, so it only calculates one. And then when you do next week's payroll, go in, view the details, change the return to work date so it's 2 weeks. So hopefully that makes sense, and that will help some of you out if you wanted to do it that way. But we are actually out of time at this point, so I just want to finish by thanking you all once again for joining us at the webinar. Please do take a minute to complete the survey as you leave if it pops up, and look out for your follow-up email arriving in the next couple of hours, so later today. If you'd like to join us for shared parental pay, we've got that one coming up on Thursday at 2 o'clock, so do get yourself signed up. sage.co.uk/webinars is probably the easiest way to get to our timetable. But for now, we're going to wrap things up. Thanks once again, everyone, for joining us, and hope to see you on some of our other webinars in the future. So goodbye for now.